I think the good news is, from a Australian market point of view, that Australia is certainly considered one of the gateway cities. There's probably only 5 or 6 gateway cities from our perspective where you get that international movement, whether you're talking Tokyo, Shanghai, New York, London, Paris. But Australia is certainly on the top of the radar for most offshore groups looking to get money around the world. Now, it's a very liquid market today. In the past, probably markets may have been a little bit more static. They didn't move as quickly. But today, with the global market, funds, investment funds, pension funds, they move very, very quickly. And you look at Australia, for example, in 2014, there was about a 28 to 30% growth from offshore groups investing in Australia. So we're talking in that pool of around about $37 to $38 billion in 2014, and we expect to see that grow rapidly through 2015. I think in a very simple word is yield. That's a return on their investment. Out of all the gateway cities, Australia provide the highest yield return for these investors. So everyone likes to have a portfolio which is diverse, which gives them protection in simple terms from movement in funds around the world, as in values going up, values going down. So you have a diversified fund. But Australia, out of all those gateway cities, will get you the biggest return. You look at your prime to A grade yields can vary between 5.5% to probably 6.75%, which you look at some of our competitors, as in countries with gateway cities, they're circa 2.5% to 3.5%. So people chasing a return on investment will chase the Australian market, and we're seeing a lot of that at the moment. We haven't really seen a lot of the new entrants being Asia, more specifically China, where you may have noticed, it's only been the last 18 months that the large Chinese insurance groups are now investing offshore. And they've now started to look at a number of Australian transactions. They've missed out 2 or 3 times. So they're now learning the nuances in our market, and you'll start to see them being successful in the very near future. And we're talking about assets in value from $500 million to $1 billion in single tranche assets. And that's where we'll see them move up that yield curve. They'll chase for some of those assets, one just sold in Melbourne for 5.75%, 15-year lease to the National Australia Bank. And so that is very compelling for investors to have such a strong leasing covenant. So it effectively becomes a 10-year bond at 4%, 3%, or you look at someone looking to invest in a yield of say 5.75%.